Title.
Mine is asking for a title and a description. What should I put?
Hey, whatever, because we live right now.
Wow. Wow, you played your girl close like that?
All
Maybe
right.
required.
So, episode 2, the Legacy Lounge. Today, we are talking about the 401k roller coaster. Fancy, what you got for us?
Um, an exit strategy for people to get off of the roller coaster.
But ain't no love.
And the love?
Ain't no love. Roller coaster of love, but ain't no love.
No, it's definitely not love.
Is it even a fun ride? Well, it may be fun depending on your age, because them dips when you get older may give you heart palpitations, a heart attack or something, especially when it's time to get off and you realize, oh, I ain't got as much as they said I got in my account.
Yeah. I don't know when that's ever fun at any age to take a dip in your account unexpectedly and unauthorized. Right?
What you mean by unauthorized?
Unauthorized. Well, people have things, just like when we have overdraft. It's unauthorized, but they're coming back for their money. So I think the same holds true when you place your trust and setting aside money for it to grow, and do so, and then you take those dips, and there's nothing you can do to recover. You haven't been equipped with the information, right? A lot of times people don't even know what their money's being invested into.
Oh, that is so true. So true. I checked some of my friends' accounts. I'm just like, okay, you got a 401k, right? Yeah, I got a 401k, a 403b, 457, the TSP, whatever. And then my next question is, what is your money invested in? And people just like, 401k, what do you mean?
Exactly.
I'm like, no, what is, let's take a look under the hood and see what you have going on. And so the default companies that my friend's account was in, all those stocks were going down. It was going down. So you opened up your 401k and you see that your money is over here on this side, and all the companies on this side were going down. All the companies on this side were going up. And it's just like, wait, so you're telling me I can move my money from here to here? It's still inside my 401k? Yes, that's the easiest thing you could do. But just something so simple as that, people didn't understand it. And
they're not aware. Let me ask you this. Do you think that's by default, or do you think that's by design?
Ooh, I don't know. Because, I would say the silver lining is this. At least they gave you the option to move it over. But whether it's by default or design, that is a good question.
I always believe that the intellect and the powers to be do things to their benefit, so the house wins. I think a lot of times they bank on people's ignorance. And I think a lot of times that's why those things are not readily pushed to the forefront for people to be aware of. So I always feel like it's by design.
Okay.
I do.
Okay, yeah. It was in, like, again, a 401k isn't something that just happens in nature. Somebody had to create it and put thought into it.
The construct, absolutely.
Yeah. So in that case, I would say it is by design because, again, why is it there anyway?
Why is it there? Then if we dig a little deeper and pull back some layers, we start to identify that the people who constructed it, the people of prominence, power, and wealth, that's not what they use for their money.
Yeah.
That's why I believe it's by design.
Yeah, so it is by design. Another thing that when it comes to 401k, so we already know, okay, let's just start off establish some ground rules. You're going to get taxed on this money. There are fees associated with this account. If you're under the age of 59 and a half, you're going to have to pay a penalty to touch your own money, which is crazy. And then after a certain age, you have what is called RMDs, which is the required minimum distribution. And I was talking to somebody earlier about this, and they said they feel like they've just been pimped. They feel like they've been pimped. Where you're going to put money away and then make me get my own money just so Uncle Sam can get a piece of it.
That's right.
That's
That's right.
crazy. That's crazy.
That's exactly my ideology. It's like that's why I feel like it's by design, not default, because who comes out with the winning end of the stick, right? There's a false sense of security that I think is an association with that because of the volatility. And the reason that people are putting it away is because they can't withstand that. They're trying to put it away for later, right? So you're not taxed. Then you are taxed. So now you're not taxed on the seed. You're going to tax me on the harvest, but you told me I needed this. I'm no longer working. And this is what I have to deal with. And if I did something beneficial to myself where I still want this to stay there and hopefully compound or grow, you say, no, 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 no. You better take your money and go.
Yeah.
Cash me out. I need that. So it's like, it's handcuffs that we are inadvertently put into, or a cage, or a system that we think is a beneficial thing. And not until the gate closed, you're like, uh-oh. If you get the opportunity to recognize that, right? Even if you get the opportunity to even get to that point, you recognize or realize what's happening. And unfortunately, all too many times, that doesn't happen. It's too late by the time it does.
Oh yeah, that is absolutely true. Another interesting thing with the 401k, man, there's so many little things. But the thing is, so people want to contribute to it because that's all they know. Fine. If that's all you know and you're contributing to it, but know how it's funded. For example, a lot of people believe that it's dollar per dollar match, and it's not.
They don't believe that.
A lot of companies will only match you to a certain percentage or a certain limit. And
Correct.
then you have some companies, it's all mind games. It's all mind games. We're going to match you 5% up until 6%.
Yeah.
We're going to match you 50 cents on the dollar up until X amount of dollars. So it's really like, how much money am I really going to have at the end of the day?
Actually, right. It's a woozy, it's a wazy. It doesn't exist. Was that from Wolf of Wall Street?
Yeah. It's a woozy, it's a wazy. It's, it's
That's exactly. And here's the thing, we're laughing about that. It is such a detrimental thing when we think about that and people are doing what they need to, supposed to have been guided and cautioned to do. Social Security won't be there. A lot of people recognize that. They may or may not. The numbers say that accordingly. I saw something recently that said that they are pushing the age on retirement.
Yeah, pushing it up to 72.
For 70 who? Who about to work to 72? We see it happening now, and typically it's not because people want to, it's because they need to, unfortunately enough.
Yeah.
So the writing is on the wall for the generations to come in accordance with that. But then this nest egg that you put away, this 401k, it has been squandered away because your government and your non-blood related uncle Sam.
That's got to be your favorite uncle, right?
Listen, a lot of people have things in their family. They don't have a favorite uncle, and that would be for what obvious reason.
If you constantly paying this guy, he's got to be your favorite.
Got to. Well, people do it. People definitely do it. They
man
are none the wiser, and just not aware of things that are out there, tools that can absolve them from having to participate in things that in the end are just not the greatest option for them and their money.
Yeah. So what I know, you have a lot of people in the financial services area, especially in our section of it, which they are completely against 401ks entirely. For me, I'm not completely against them, because if that it is a vehicle. Now, it's all about, is it the right vehicle for you, and how are you managing this vehicle? If you are at a great company and your employer does give a good match, I would say fund it only up until the match. Anything over it, do not overfund. This is not a vehicle you want to overfund.
I agree wholeheartedly.
Use it, but
utilize it for what it's good for, but do not keep your money tied up there, because essentially it is tied up there, right? If you don't qualify for a hardship under their rules, their terms and conditions, Because your hardship and my hardship might be different, right? My hardship is I want to go to Cabo with the girls or whatever the case may be, right? But your money is tied up, or you're penalized for utilizing it.
Yeah, yeah. And then even going back to the funding situation, it's how much of it is actually free money that's available for you to use, because if you're getting matched on it, but then you're going to have taxes being taken out of it, like you got to think also, is the taxes going to be higher than the match?
Well, do taxes go down historically or up?
Come on, Fancy.
Well, there's that. There's that,
Come
right?
on, you see the price of everything going up: milk, eggs, gas,
Yeah,
groceries.
everything.
Come on. So only thing that ain't going up is, raises, people's paychecks. Man, when you think about it, that's insane that you're going to get taxed. Taxes are going to go up, but your check ain't going to go up. So it's just who's really winning?
No. Well, the winners are the people who make a concerted effort to take their power. They don't have to. That everything is optional in terms of that. There are financial products that are readily available to position you to be your own bank, right? There are products by which you can have a life insurance policy that is financed by the bank, right? And so just the traditional way of doing things, everything is changing. One of the things that my father told me, and I was like, who is this man? Because he don't talk like this. But he said, if you don't change with the times, you'll soon be left behind. So if you got your grandfather's life insurance, which is really death insurance under the skies or the name of life insurance, because you can't utilize it during your life, you might want to change that. If the way that you're saving for retirement is banking on 401ks, you might want to change that. Pensions that are being swiped away, you might not want to bank on that. So we're in a very pivotal time when we don't have to take that. You don't have to take that.
Yeah, it's funny that you said change with the times, because these, especially when it comes to life insurance, it may be the same word or the term life insurance, but it operates completely different. And if you're still using the old way of doing things, then you're definitely not changing with the times, and you're definitely going to get left behind. For example, if I went back into the 60s and I was like, hey, you know what? Use your phone and Google this for me. They're going to be like, what?
Right.
My phone? Or if I'm in the other, especially, again, if you don't have a cordless phone, and I'm like, hey, hand me your phone, and you're running this cord all the way across the house.
Tino, they already had cordless phones in the 60s, but I'm going to let you cook.
Exactly. It will just be something that just doesn't make sense to people.
Right.
Same thing when it comes to life insurance. If we are talking about life insurance and you're thinking the old life insurance that's just for death, that's like me saying, hey, let me get your phone real quick because I need to look something up. And even if you hand me a rotary phone, you're just like, well, what are you talking about, Tino?
Remember when we were like pirates for GPS and we would pull up MapQuest and we would print it? And we, like we were pirates with pages of, and then turn left and then turn right. Like those things are just obsolete. And like you're saying, the new benefits and features of life insurance make the old policies obsolete as well. No longer should people be reliant on something from their employer. I had such a detrimental, well, it wasn't detrimental, but even I was taken aback. I had a client call me and ask me to review her husband's work policy. We went through the policy and we discovered, although she was the mother of a set of twins and 4 other children, he was a sole provider. In the event that her husband passed away, the company was going to get more money than her and her kids. Based on the life insurance policy that was sponsored by the employer.
When it comes to those type of things, you got to realize the business is in business to make money. So you are an asset to the business. So again, if anything happens to you, it's like, how do we make money off of this? How do we not suffer the loss? Sorry, we give you our condolences. Sorry your husband died, but we still need to make some type
here's your piece.
Yeah, here's your piece.
They say 2 for us, 1 for you. Right? I was taught mama may have, daddy may have, but God bless the child has got his own. You always, in any instance, want to have something that you own, you control.
Yeah. Yeah. Those work policies are like the company car. It's like you can drive it around, it's got the company logo on it, but don't think that's your car. Don't think you're just gonna get in that car, drive to Vegas and have a good time and all of that.
You thought
no.
Right.
The company gonna call you, be like, hey, we need that car back.
That's right.
And you better fill it up before you give it back to us.
The other part is too, I think it was in Walmart, but there are other companies that do have like a convertibility feature where you can take the insurance with you. But when you got the insurance, it was group coverage, and they did the mean median mode and took everybody's age, right, demographic, and things like that. Now, when you go to stand alone after separating for service, you recognize this is no longer affordable. Because the 18-year-old that worked there, the 24-year-old that worked there was a benefit for you in terms of rates and pricing. But now when you stand alone at your big age of whatever you are at that time, whatever health conditions that you have, it's a no-go.
Yeah, again, it goes back to how you were saying that you got to make sure that you have everything under control and that you got your own. You're standing, again, you got a group of people, and let's just say Mr. Employer is the one holding the umbrella and it's raining. Okay, great. I'm standing underneath this guy's umbrella. I am covered from the rain. I'm protected. The whole group is over here. You leave and you don't have your own umbrella. What you doing?
I'm a melt. Brown sugar melts when it get wet, so I can't be without my own umbrella. I always got to be covered. I always got to be covered.
So then that means you got to go buy your own umbrella. That's what it comes down to.
Sooner rather than later.
Yeah.
Because what happens is once things start to occur, and if the providers of the umbrellas know that there's going to be an influx, the price don't go down.
Yeah.
The price goes up.
You want to know another crazy thing on top of that? It's going to rain, but then they also have the weather machine, which is going to make it rain even harder.
That's deep.
Because again, in this case, the rain is going to be the fees, the taxes, all the other financial uncertainties, making sure that, hey, it's going to rain. And in fact, as life goes on, you're going to have not just some rain, not just some drizzle. You're going to have storms.
Storms going to come.
Storms.
They're going to come.
They are going to come.
Yeah.
And you're out here thinking that, okay, this little flimsy Dollar Tree umbrella can protect me. Now, no shade to Dollar Tree, but
it's going to come. That people, for whatever reason, be our diet or whatever you want to attribute to, they're susceptible to disease, ailments, accidents, right? Just going to work.
Family history. If everybody in your family has this illness or this diagnosis, what are your chances? Does your policy cover that in the event that you still live? People are living with illnesses. Illnesses aren't just taking people out anymore.
No, ain't no money in that. They living a long time with it, with an achy, breaky heart or whatever else they got going on, in so many instances because of that. One of the things that kind of breaks my heart too, we talked about it briefly, but there are now children who are being susceptible to illnesses earlier and earlier and earlier. Yeah. And the fact that you're able to put a policy on your child at 14 days, and you can take advantage of a clause that says their insurability is guaranteed for a lifetime. You look at childhood diabetes. They don't go outside and play like we did. They're not necessarily always getting the best nutrients, fresh fruits, vegetables, things like that, and it has an adverse effect. So even the children are consuming more and moving less, right? And it leads to other things. So
Yeah, and to tie this back, because I know today we're talking about 401ks. In the event that you are in that, you do get that illness or that sickness, that diagnosis of, oh, I have something that's not going to kill me, but it's just something I'm going to have to live with and deal with. Going to get that money out of your 401k to pay for your treatments and stuff is a big no-no.
Mm-hmm.
You could take the hardship withdrawal, but again, the taxes and the fees, you don't have access to all your money, versus having, again, one of these new types of policies where you have the living benefits. They just pay you that money tax free.
Lump sum. Tax free.
Lump sum. And even in some cases, you can get a monthly benefit.
You can.
So you can just ride that policy on out. Like, hey, I had a stroke. I'm not going to work right now. Do you take money from your 401k, or do you just have your life insurance pay you while you're alive? So again, going back to that phone analogy that we were talking about, it's either you got a smartphone or you got what do they call it? A dumb phone? Do they still call it dumb phones, or is everybody with a smartphone right now?
Well, yeah, the smartphones are in the hands of people that are. Well, anyway, I don't know what they call the old phones no more. But
so let's just say if you don't have a smartphone, you got a dumb phone, right? And the same thing with your life insurance policy. You either got a smart policy or you got a dumb policy.
A dinosaur is what I call it. It's just extinct. It's not beneficial. It's a one-trick pony. You don't have to have a one-trick pony policy when you can have a Swiss Army knife that's going to cover so many different things. I think one of the major causes for bankruptcy, homelessness, all of these things, it leads to medical bills. You exhaust your savings and your funds and going into your 401k and being taxed and penalized for these things. You've exhausted your savings, right?
Yeah.
You don't have to.
A sickness or illness can wipe out your entire savings. And then not only that, people are simply, even on the flip side, even if you're healthy your whole life, if you're healthy, then now you got to think about, well, are you going to outlive your money? I'm so healthy, but my money ain't. My money's on life support, but I'm out here kicking, living life. I'm in my 80s running 2 miles every day, and my finances can't keep up.
Inflation, cost of living, people are living longer. Absolutely.
Yeah. So now you got your money in this 401k, which has a set limit. You know how much money is there. Well, really, you know how much money is there after you pay taxes, fees, all of that stuff. So is that going to last you the rest of your life? Or do you put your money into something that will pay you a tax-free income for life? Which one do you choose?
What would pay me a tax-free income for life?
Something. So you're asking me about how to insure my life's money. Okay, so to insure my life, I would need life insurance.
There's a concept. Okay. And I like that connotation, because I think a lot of times, all too many times, when people hear life insurance, they just think of death insurance.
Yeah. It's just, okay, somebody died and some money was left after a funeral. And then, for certain people, I'm not going to mention any names, not going to point any fingers. I hope this elbow ain't pointing at somebody who may say or do this. But, people go, well, nobody left me anything. I ain't leaving them anything.
I think we've moved away from that. I will give credit to these generations. I hope so. I would hate to think that anybody could be that callous, especially for a family they created, right? Because we recognize, and a lot of us are really in a sandwich position where we have our parents here, we have our children here. We do recognize that the family you create becomes more important than the family you came from. So how dare you create and not? I would hate to think that. I can't see it. I don't think
you
we're like
produce
that.
but not provide. That's crazy.
produce but not provide.
Yeah, you produce these kids, and now you got to provide for them. That's heavy.
That's disgusting.
Yeah,
That is disgusting. That's something. Yeah.
It happens all the time, but we're not one to judge.
No,
Not
they
one
used to say if you can't feed them, don't breed them. But we don't talk like that no more.
Hey, go back to old, rest in peace, old Michael Jackson. Can't feed the baby, and don't have the baby.
Right, exactly. Show said that. You're so funny. He's showing
starting something.
Right. Simple logic, but nonetheless, it's just about people being privy to information that'll be beneficial, and just how easy it is. It's not rocket science. It's not extremely expensive. You know what I mean? And I know we're talking about 401ks, but my heart lie with the babies. We were having a conversation, and you were able to do something for a client of yours last week and help him make his children millionaires by contributing
millionaires.
$25 a week.
$25 a week. $25 a week. Now, again, that's just a meal. That's one meal. So again, you got to think about it. You sitting down eating a meal. This meal is going to cost me $1 million in the future. This one little meal, I am eating $1 million.
What I like about that as well too is that even if we're talking about reallocating funds, that $25 in case of emergency, if you need access to what it's provided because it's life insurance, you can reach out and touch it. But you could put 75 into that 401k and it's not accessible to you. Right? So we just want to be clear and strategic about where we're putting our money. Money works for you. Money grows. Money does all those things when it's placed in the right position.
I like that you say money grows, especially because you got that tree behind you. One of the things I always tell people is I'm going to show you how to safely grow your money tree. And now people have the concept of, money doesn't grow on trees. But look, you can grow a money tree. You can grow it huge. I was talking to an older gentleman a few days ago, and I asked him, okay, if it was my business to sell apples, that means I need to have this whole apple orchard. How many seeds do I need to start an apple orchard?
An abundance, a plethora would be my guess.
You only need one apple. You only need one seed. You only need one seed because that one seed is going to grow one apple tree. That apple tree will then provide all the other apples. And inside all the other apples
are more seeds.
So again, everything big starts small. People think that they need a lot of money to do this. No, I showed you how to turn your kids into millionaires with a $25 seed. Now, only thing you need to do is water that seed. Take care of that seed. That $25 is going to turn into $1 million. How much more options and how much more money can you then produce with that $1 million? That's real estate. That's businesses. That's land. Other investments. That's what it's about. And it started with one seed, one guy. So sometimes we got to stop looking on the outside and realize that, hey, we ourselves are the seed. And Father, he's like, I'm the seed for my wealth tree. I'm the seed for the generational wealth, for the legacy, for all of that. I'm going to take care of myself, and I'm going to take care of this $25. It's going to turn into $1 million. I'm going to give it to my children. And I'm going to teach them what to do with it.
That's right.
Because he's like, my thing may be real estate. Their thing may be something else. But it doesn't matter because it's all under the same family umbrella.
That's right. And then the other part is, even if you don't teach them, you can still relegate what occurs with it, with the proper trust structuring and stuff like that. But the
thing is, you got options at the end of the day, because become 80 years old and have a handful of wishes and no options. Oh, I wish I would have done that. I wish
Wow.
I would have done this. It's like, do you want options or do you want wishes? You know, how
Mm-hmm.
many people die with so much regret? I wish I should have would have done this, instead of being like, hey, I took care of this seed way back in the day. It turned into this tree. We got the money. You know what? Now, because think about this. You turn your kids into millionaires, right?
Mm-hmm.
What are they going to do for you in the future?
In terms of
In terms of taking care of you.
oh, absolutely. It's
Yeah.
the greatest return on your investment. Absolutely.
Yeah.
Absolutely.
Again, they're going to take care. Hey, you know what? We wouldn't have this $1,000,000 if it wasn't for daddy and mommy. All right. We got all these other businesses and things going on. It ain't nothing for us to take care of them.
I like when I talk to my final expense clients and they just share with me certain things about their children and how they do what they've done.
Mm-hmm.
And I tell them that's a great testament to the type of parent that you were. Because initially we're your babies, right?
Yeah.
But there's something that happens and you become our babies. And now we
Mm-hmm.
want to take care of you. We want to nurture you. We're able to look back and recognize either the sacrifices, right?
Mm-hmm.
Things that you did that made us the person we are. And when people are proud of that as children, they just pour back into you because you're so thankful,
Yeah.
right? So I agree. It's the greatest return on your investment.
Well,
And then as parents, the other part to that is every parent wants their children to be better, have more, go further than them. And for
you
you to give them
sure? You sure about that? I'm not
that, I
completely
think
sure about that. I'm
so.
completely sure about that, because then I will challenge you on this. And again, no judgment here, but I'll challenge you on this, right? If that was the case, then why would I not put the $25 away
Because I just don't know.
versus buying the sneakers or the expensive birthday party, especially for a 1 year old, where a 1 year old is not even going to remember the party. Yeah.
It's a mindset. It's the same reason why people may pour in an exuberant amount into a wedding and then go rent or whatever the case may be.
Mm-hmm.
Um, it's so funny because my god sister and I had my son, she had our daughter, and I can remember one instance we out shopping. We showing out for our babies. They draped up, dripped out the whole nine, right?
Mm-hmm.
And we went back to her mother's house and she looked and she saw everything we bought, and we were so proud and showing her what we got and this and the third. She said, "My grandkids, the poorest little rich kids I ever seen in my life." We were like, "What? Like, what's she talking about?" We just didn't even get it, right?
Yeah.
Like
Mm-hmm.
things for them to grow out of, but we was geek because they had somebody else's name on it. So there's a mindset, right? In accordance with being aware of the options. And so being influential in the community in various places and sectors to make people aware of that, because you know what I stand on. We are not stupid. People are ignorant, but people are not stupid.
Yeah.
And then other demographics, we recognize people are not poor. They got the strongest dollar. That's why everybody comes into their neighborhoods, right, to take advantage of it, right?
Mm-hmm.
So it's just about reallocating our money and repositioning it to be a greater benefit later on so that
Yeah.
we can eradicate that kind of stuff.
So it comes down to three things: making money, keeping money, and multiplying it.
Mm.
It's not really so much about how much you make, but how much you keep. Because you can make $2.5 million, but if you spend $3 million, you're still in the negative.
People don't know how to retain it. Correct.
Yeah. So it's, you made the money. Everybody knows, okay, well, if I got a job or if I got a business or whatever your vehicle, whatever your way of making money is, but what are you doing to keep that money?
Mm-hmm.
Not just keeping it from just spending it, but keeping it in all the different forms. Like, how are you not paying taxes on it? How are you not just letting it fly out the window? How are you keeping it in your pocket so that you're not using it for health reasons? Are you keeping, again, health is wealth? So are you keeping it by keeping yourself good, so then you don't have to pay these doctor bills and things like that? So
I,
again, how are you keeping the money? And then the third step is, how are you multiplying it?
It's a 3-step process. I say making money is a skill, right? Saving money is a habit, right? No, I'm sorry. Making money is a skill, and keeping money is a habit. Multiplying money, that's the skill. So making money, I forgot. It was something I was looking for it last week as well. But it's one thing to make money, but it's definitely a skill. There has to be something put in place to teach people how to multiply money, right? Saving it is a habit, but of course, where you save it is going to have the greatest impact on the next part.
Yeah, it comes down to, like, you really just have to make a decision. I'm going to make a decision to not just throw my seeds everywhere. I'm going to make a decision to keep my money and grow it. You know, money loves speed. The faster you're able to be like, okay, well, I'm going to get my money from here to here, the sooner you do it, that's why they say invest early and invest often. The sooner you're able to go, okay, I'm going to keep my money over here so then it can multiply, the faster it's going to start growing. Money loves speed. Wealth loves time. I was talking to a guy the other day, and he was saying how he fell victim to a scam. And I was like, you know me. Why did you decide to put your money over here instead of the recommendations that I usually give over here?
Right.
And it comes down to, well, Tino, this over here was going to be faster. And I'm like, you was trying to get rich quick. You was trying to get rich quick, and you fell prey to a scam versus putting the stuff that we're talking about. It's not going to be overnight. $25 turning into $1 million is not going to just happen like that. It's going to take some time, but it's a tried and true method. It will. I'm telling you, you plant the seed, you water it, you will get a tree. The tree is not going to just pop up overnight. It's not going to do that. Generational wealth may take a generation. Again, that's the first word in generation. But it takes time. Wealth loves time. It takes time for that money to grow and mature. So, but poverty and being poor loves indecision. When people cannot, I don't know whether to do this or do that, you got to make a decision. Do you want something, again, that's tried and true and that works? It just takes time. Or you're going to sit there and be like, okay, well, you know what? That's going to take 20 or 30 years, so I'm not going to do it. Here's the thing. The time is going to pass either way. And in this case, with the guy who I'm referring to, he lost money. Instead of, he could have put that money away, let time do its thing, and have way more. But now what you got to do? You got to try to fight just to get your seed back.
You do. They say there's only 2 pains in life, and it's pain of discipline or regret. So if he could have been disciplined enough to give it the time to allow it to grow and flourish, he'd have been all right. But now he has a pain of regret, right? Because he lost.
Yeah. And then that gives him that burn and that scar. And then what happens is you let your past failures stop you from your future success, because now you're like, everything's a scam. Nah, this ain't a scam. We ain't a scam over here. We are we are licensed, we are regulated, we passed all the exams,
we're on this side,
all the hoops,
right?
Did the fingerprints,
and all for your benefit, because here's the thing, I'm sure morally you felt awesome about being able to help this man do what he did for his family. I'm sure that there was some compensation and association with you doing that. All that pairs in comparison to what you've helped him create and set up for generations to come.
Yeah.
So everything we've done, right, being tried and true, jumping through hoops, being licensed, fingerprinted, the whole 9, it's not for my benefit at the end or beginning of the next day to the event that it is, to the advantage it is, the people that I'm able to help, people who make a decision, right? People who are able to make a decision. It's just like a teacher in any other arena, right? Whether it's your math teacher, your art teacher, your coach, right? When in training, whoever trained LeBron or whatever the case may be, it pales in comparison to what he was able to do with that training. So we're here as trainers, facilitators, moderators to show people what they can do to get their goal accomplished.
Beautiful, beautiful, beautiful.
I think so too.
Yeah, because again, it's not like that $1 million is coming to me.
No, not that million. Your own million.
Yeah, my own million. My own million.
But not that
I ask is just be like, hey, that was the guy who helped my dad. That's it.
Absolutely. And you think they won't? It's a very life-changing thing, even on a smaller sector of things, helping people. I'm sure you've experienced it, where just the family getting that check or them not knowing that it was going to be doubled or whatever the case may be. It's a godsend at such a detrimental time where people are devastated. They say you only need money for 2 occasions, good times and bad times.
And you're always in good times and bad times.
That's it. That's it. That is it. That's it. So I believe in buying children money, buying people money, making sure things is there. They say the only certainty in life is death. That's it. Somebody's going to make money off your death. Hopefully, it's somebody that you care about in your lineage. Because be it the undertaker, the graveyard, the medical facility, the creditor, whoever, they're going to get paid.
So we're going to have to back up for a second because you said something that's so key. You said you believe in buying money.
Absolutely.
Yes. So anytime you buy something, the notion behind it is that whatever you're buying is more valuable and worth more than the money that you're spending. So again, in the case of buying money, if it was like, hey, I'm going to give you $1, you're going to give me $5. That means I just bought $5 for $1.
And I'm about to go find as many dollars as I can so you can keep giving me $5.
So again, that's a good deal. It's the same thing when it comes to insurance. You're buying money. And that money can be given to you tax-free to use for X, Y, and Z while you're alive, whether you got a sickness, and worst case scenario, if you pass away.
You know what I'd like to expound upon? You're talking about the fact that the money can be utilized while you're living. I want to draw attention to the fact that there's tax codes such as 7702 that not only allow for you to utilize it while you're living, but it's like a super savings plan. It's not gaining the interest that your money is getting under the mattress, not what the banks or financial institutions are providing for you. It's on
not riding the roller coaster.
That's how you get off the roller coaster?
Yeah. That's how you move on up to the east side. Deluxe apartment.
Seriously? That's where everybody want to be. I'm definitely repping the east side. Anybody who watching east side's finest. But go ahead. I'm back.
Because you're not going through the ups and downs. Again, think about this, especially in a lot of these plans that we're talking about. When the economy is going up, you going up with the economy. You going up with the market. Everything's a great time. When the economy is going down, when people are losing money.
They on their Mary J. Blige, they going down.
When they are going down to the ground, what's going to happen is you're not going to go down. You're just going to keep riding. You're going to keep maintaining. And when it goes back up, you're going to go up with it.
Wait.
If you want ups and downs, go for it.
I believe in visual aid. So it sounds like what you're telling me is that with these life insurance plans, it's still doing the same thing that your 401k would do. But with the 401k, when the market goes up, your money goes up. When the market goes down, your money goes down.
Yes.
Sounds like you're saying that people can't lose with the stuff we use because when the market goes up, the money goes up. And then when the market goes down, your money is just going to wait for the market to go back up again and then meet it again?
Not only that, not only is it going to wait, you still are going to earn tiny percentages. So it's going to still just be going up just slowly, So it's still a gain. It's still a gain.
But never a loss.
Never a loss.
So I only participate in the uptake in the market, never.
Never the down. The only way you can lose money, again, the only way you could lose money in this is if you take your money out and you just blow it.
Mm. And that's a loss. That's definitely a loss.
It depends on what you spent it on.
But you would attribute that loss to your, well, and then like you said, it depends on what you spend it on. So if you do it with something that's beneficial, like land, because they can't make no more land, things like that, right? Of course, it's not a loss.
Yeah.
So why don't more people do this, Commissioner?
That is a great question. It's simply they don't know about it. They're not connected to people like us. So we do this show for you, the viewers. Again, we're not hard to access. We're not hard to reach. Reach out, have a conversation, and let's get you set up. It's just that simple. I heard I can get my money tax free. I put my money in this plan. It can't be that easy to get it tax free. Yes, it is. Just, hey, Tina, I need to get my money tax free. All right, cool. Hey, insurance company, they need to get their money tax free. It's their money. They need it tax.
It's just that simple. And so I don't know. What do you think that causes the analysis paralysis with people where, because there's an influx of information now on social media, on everywhere. And yet.
Look, with that being said, vet your options and make a decision. Again, we talked about poverty and being poor loves indecision. If you're like, oh, I don't know because there's so many options, pick what's going to be the best for you. But truly understand, because if you know that this is your livelihood, then that means you need to make a decision on where you put in your livelihood. If you want it on the 401k coaster, cool. Just know how it works. Know that there are taxes, there are fees. The money that you see in your account is not going to be the money that's in your pocket. And if you do have a 401k, right? And so another situation that I'm talking to people about is they have this 401k at a previous employer, money just sitting there, not realizing that, one, you're not contributing to this thing anymore, so it's not growing. It may get some gains with the market, but you're also going to take those major dips. And two, because you're not with that employer anymore, again, going back to the guy holding the umbrella, that means the cost is now passed on to you. Meaning all of the fees that your employer was paying to keep this 401k account going is now passed on to you. So again, the money that you see on your statement ain't going to be the money that's in your pocket.
No, it's not. I know we're talking about 401ks, but I think it's imperative. Most or many may know, but there's other outside of life insurance, because what if I just feel like, listen, I don't need life insurance. Okay. I don't want life insurance. Okay. But I don't want to participate in the volatility of the market, or I've left that employer, right? What are my options in an instance like that?
So my question to you would be, what's your goal? What is it that you want? What is your ultimate goal? What is it that you truly want to do at the end of the day?
I don't want to lose any more money. I want to stop the hemorrhaging. I want to get off the roller coaster. What I got, I want to keep.
Okay, so you want to put it into something where you can't lose money. There's a few. I personally know a few different programs, but that's something that somebody would have to come directly to me and talk about. Like the real estate program that I'm associated with and other different vehicles that's not tied to the market, but it all depends on if you're...
Whoa, Commissioner, can't we just do an annuity? Can't we just annuitize the money?
We can. My question again is, what is your goal? How do you want this money to flow? What do you want it to look like? Because an annuity, some people like, I don't want my money tied up for a little while. Okay, if you want, it depends how liquid you want your money. How soon do you need it?
Right.
Now, with an annuity, again, one of the best things, and I know a lot of people hate annuities because of the old annuities, but there's so many new annuities out there. And the crazy thing is, you can make an immediate bonus on your money.
What does that mean? What does that mean? An immediate bonus on my money?
Let's just say if you have $100,000, right?
I do.
You can put it into an annuity, and that annuity will say, hey, thank you for letting us protect your money, because annuity is just protection against, it's just protection for your money.
Okay.
So you can put it over here into this account, and the company will say thank you. And just because you chose us, we will give you a 35% bonus. That means you just made 35 grand like that. So now
for
you're
moving my money, just for moving my money,
us for moving your money,
protected place where I can't lose it. I made money.
You made money just like that. You just made 35 grand just from going from account A to account B.
Huh. Okay.
Yeah. And then you could say, hey, you know what? I want this to grow. And again, with an annuity, you're going to have the growth and none of the losses.
None of the losses.
Mm-hmm.
What is the smallest amount of time that I could not annuitize or place my money? And is it 5 years?
About 5 years.
5 years. So I can choose how long.
Yeah.
5, 7, 10, 15.
Mm-hmm.
Okay.
And obviously, the longer you wait, the more time your money has to grow.
And my money's growing inside of this annuity.
Yes.
So don't put it in a CD. Don't do the 401k. And also the benefit of things like annuities are the ownership and survivorship options that are available with it. Mm-hmm. A lot of times we have our money tied up into products and things, and it's like if you don't use it, you lose it.
Yeah. Yeah. And another bonus with, depending on the annuity that you have, especially if you have what is called a lifetime income rider, you will get paid for life.
What's a lifetime income rider, Commissioner?
For life. It's simply exactly what I just said. You will get paid for life. Even if the money in the account runs out. You got $100,000 and it's just like, hey, I need you guys to pay me 10 grand a year. In normal math, that means you only got 10 years worth of money.
Correct.
If you got that rider on there saying, hey, you are guaranteed to pay me for life, that means I got a lifetime worth of money. So if I'm getting 10 grand for the rest of my life, I will get 10 grand for the rest of my life.
So I give them a little bit of money and they give me more money. But I got it tied up in the 401k somewhere else.
Mm-hmm. It's the math ain't mathing on that.
No.
It ain't mathing. And it's not mathing because there's always those little hidden subtractions. Versus the annuity, it's always, if it's going to be hidden, it's usually hitting additions. We put your money over here, we just made more money on top of your money. Then you trying to take your money out, but you're getting paid for the rest of your life, even if this account has no money. So it's just like, bruh.
Yeah.
Which side you're going to take? The side that's going to make me money continuously, give me money out of thin air, or the side
I don't want to be on the side that's going to take me money. I want to be on the side that's going to make me money. That's what I want to do.
Okay. A lot of people are on the side that's going to take their money.
Yeah.
And the thing is, we see it every day. How many people, like your grandparents, your great-grandparents, oh, I was working at this job. I thought I was going to have that. I had $500,000 in my account. I went to go withdraw it. They said I got $250.
That is so disheartening.
Mm-hmm.
And not uncommon.
Mm-hmm.
And not uncommon.
Yeah.
Same thing has happened, and not to misspeak, but the same thing has occurred with life insurance. People have a false sense of security, not knowing that it doesn't have cash value, not knowing that it may expire, not knowing that it doesn't have living benefits. So it's not what you do. As the adage that is how you do it too. So you want to be very strategic in knowing or letting your advisor know what's your goal, what's your long-term goal, so they can structure
Exactly.
things accordingly.
Exactly. It's all about your goals. It's not about my goals. It's not about anybody else's goals. It's about your goals. And your goal doesn't need to be, hey, I need to stay in this trap. I need to stay in the rat race. Hey, your friends may be in the rat race. You don't have to be in the rat race.
That's right.
In fact, take them out of the rat race.
Yeah.
That's what this is all about, showing you again how to have more control over your money so you have more options, so you have more control over your life.
I think that's imperative as well. Always caution people. So, like when you go to a place of worship and you may hear the pastor or whoever in the sermon with, no matter who church it is, get in somebody church, right? And
Mm-hmm.
so I kind of have that ideology as it pertains to insurance. But one thing I caution people is to be aware, because if a person is coming to you or at you, telling you what type of insurance you should have or you should need, and they haven't consulted with you to know
Mm-hmm.
what you have, what your goals are, and things like that, they're not serving you. They're serving themselves. And our position is truly one of
Mm-hmm.
servitude, right? Some companies only can offer you one thing. And so
Yeah.
that's the benefit of working with a broker, who
Mm-hmm.
can allocate your funds or a portion of it and spread it. I ain't gonna do it. I ain't gonna do it this week. I ain't gonna do it.
Come on, hit him with it one time. Hit him with it one time. One time.
I ain't gonna do it this week, T. I ain't gonna let you get to it this week. I was, felt like I was in the booth. But and unless they're doing that and they're in a position where they can place portions of your money accordingly, right?
Mm-hmm.
It makes a difference. It's the reason why we have a checking and a savings. It's the reason why we have a bank account with Chase and then one with Bank of America, because totally free checking over here and totally free checking over here has different features and benefits. And
Yeah.
so until I know your needs and what your goal is, I'm gonna tell you where to put your money.
Yeah. So again, the first thing I ask everybody is like, what do you want this thing to do? You come and then you sitting with me or you gave me a phone call. What is it that you want to do? And then it's just my job to connect the dots from point A, where you are now, to point B, what your goals are, and just connect the dots, build that bridge.
Yeah,
That's it.
yeah.
And what I will say about things like when it comes to not knowing the information or not knowing what's out there,
Mhm.
it's like this. A lot of these insurance companies don't have commercials. They don't have these marketing channels. Unless you know somebody who knows somebody or in the know with people connected to people like me or connected like you, Fancy, people just will not know. It's the same thing with the cars. Ferrari, Rolls Royce, Lamborghini, they do not have commercials, but you see people driving them.
Listen, so you did that, so we gonna do this because I'm happy that you went to that analogy. And we know our run of the mill, like maybe our Mutual of Omaha would maybe be like Ford or something like that, right?
Yeah.
But we don't see commercials for Rolls Royce and Bugattis and things like that, but they're there.
Mm-hmm.
Can you speak to the correlation? Is that like premium financing with?
Oh man, yes, yes. It's like premium financing, but even it's like it doesn't even need to go that far.
It doesn't? Okay.
It
Okay.
it it doesn't.
I wouldn't just tell the people
It's gonna
about
be
premium
like
financing.
a premium financing is gonna be like a supercar. It's going to be like let's see, what's a good supercar? Like a Pagani, like a
Like a supercar.
McLaren.
Okay.
Aaron, yeah, again, these cars are out there fast, fast, but again, you don't see commercials for them. You still have access to them. You can get with somebody like us, and we can connect you. Again, it's about connecting the dots. But you don't.
Financing is what? What's being financed and what's so premium about it?
Oh, what's being financed is your money. Your money is being financed. It's you, the insurance company, and a financial institution like a bank or another another investment firm.
Okay.
Pretty much what they're saying is like, hey, we're all going to pool money into this pot together, and we're just going to supercharge it and blow it up. And then what's going to happen is you're going to get the benefit from it. We're just going to take out, our pieces.
And what I like about that is that people sometimes shun insurance and feel like they'll have the money set aside for it. But with the premium finance, you pay for a certain amount of time, and then those entities that you named, they pay for the rest of the amount of time, and you still gonna cash out whoever I tell you to, whoever I name as a beneficiary.
Look, I could show you a plan right now where somebody only paid into it for 5 years, and they are going to get out 6 figures. And they did not put 6 figures in, but it will pay them 6 figures for the rest of their life.
And they paid for 5 years.
They paid for 5 years.
Even with that being said, that's premium financing. I think a lot of people also are not aware of insurance policies where you do have a designated amount of time to pay, and then you're done.
Yeah.
A 10 pay, a 7 pay, a 5 pay.
It's all about what works for you. If you're like, look, man, I just want to put this thing in for 5 or 10 years, and then I'm done putting money into it, let it just grow. Sure, do that.
That's an option.
That is an option. If you're like, nah, you know what? I want to just keep putting money in, just keep putting money in so I can grow it even more. Do that. Just know that there are other options. You don't have to be on the roller coaster of the 401k.
Absolutely.
You control your money, not your employer, not the government, you.
Yeah. And as with most things, especially in this nature, it's so important to get started sooner rather than later.
Because what's going to happen is the time's going to pass anyway, and people are going to say, oh, I wish I would have done this years ago.
Another thing I like to speak to is that a lot of times you can't choose your insurance company, your life insurance company. They choose you. It's something you have to qualify for. And I think people lose sight of that. That's another benefit of working with a broker, where we're in a position where we can shop so they can save. Some insurance companies may think lupus, MS, diabetes, amputations may be the worst thing in the world, where others, don't view it that way. So that's why it's important for people to do their due diligence or position themselves with people who are able to shop for them and have a vast knowledge of the industry as well.
Yeah, that's powerful, because again, you can walk into a company that does the marketing, that has the commercials. Oh, you know what? I've seen this guy on TV constantly talking. I'm just going to go with him. And they will give you whatever they have to give you. But is it the best thing for you? Maybe not. Versus sitting down with somebody who's going to tailor something for you. And here's the crazy thing about tailoring, right? Especially, let's just even talk about clothes. You can get a cheap set of clothes and get it tailored, and it will look better than you going out and getting an expensive set of clothes, because this thing is customized for you. It is your size, your measurements, not anybody else.
Great point. That's a great point. Yeah. And people miss the mark on that. I'm a fan of exclusivity and customization. And the same can be done, with products. That's major.
Yep. Same thing. It comes down. Same thing with cooking. Everybody has a different taste, so it's like, hey, let's cook up something specifically for your taste.
And also, even people who have policies, a review is always a really good thing, right? Because the insurance companies are constantly coming up with different financial products to be competitive.
Yeah.
So, even within your own company, it may be an outside company, but anybody who has coverage, I implore you to either get with your agent or somebody and do a review. And your reviews should be standard, maybe.
Yeah.
You're not.
Not only because there may be a better option for you, but something may have changed in your life. And, you may now need to change your policy. Should always reflect your age, your health, and your lifestyle. Whatever's going on in your life. Hey, you just had a kid. You may need to increase your coverage or add an additional policy. Hey, you know what? You got a divorce. okay, you may need to take this beneficiary off your policy.
Right.
You may need to add somebody else,
You may need to have your parents' policies reviewed, because when they got it, it might have been sufficient. They may understand it to work one way. It works a totally different way. But when they check out, you're going to have to check in and cash out. Somebody's going to have to, or have a debt in association with it.
Yeah. Fancy dropping bars again. But what I will say to that, for all my people who are not so musically inclined, or I'll put it this way. Again, going back to the phone, if your parents got a phone from the 60s or the 50s, and you're like, okay, I need to access the Wi-Fi, ain't no Wi-Fi on those phones.
Nah, son, it's a disconnect.
Yeah, so you need to make sure your parents got that upgraded phone. Make sure your parents get the smartphone and show them how to use it.
Yeah. It's important, because heaven forbid something happens to them, they're debilitated. They can't, you gonna stop working and stop providing for your family so you can be there to take care of them? Or do you have the means for somebody to do so? Or now do we have sibling rivalry because you feel like you should take care of mama because you the girl, or you got it, or whatever the case may be? We can absolve all of these sort of issues.
Why nobody didn't check up on mama's policy? She got that policy 40, 50 years ago.
People get funny when it comes to money. She got that policy 40, 50 years ago. And back then it was sufficient to do everything that was required to be done to get her in the ground. And, they probably got the plots already, headstones, whatever the case may be. But in this day, on this dollar, it's not going that far. It's just not going to do it.
Yeah. Yeah.
So
One, does she have enough coverage? And then two, what kind of coverage? Like, how's it going to get paid out and everything? I can't tell you how many seniors I've sat down with, and it's just like, oh, I got this policy. And I'm like, where's your actual insurance policy? That's it. No, this is accidental. What are you doing, Miss Jones? You out here motorcycle racing? Like, what do you do that's going to cause an accident for you? I just sit in my chair and I knit all day and watch my soap operas, watch my stories. Okay, so it's likely that you're not going to pass away in an accident. So it means that it's likely that this policy isn't going to do anything. Oh, nobody told me that. That's why I'm here right now.
That's it.
I'm not going to bash your old agent or whoever. Only thing I can say is you got a problem here right now. Let's fix it.
Yeah.
A lot of people have problems here right now, so let's fix it.
Yeah. Yeah. I recently had to help a family. They were concerned about a policy that a sister had on her brother who was recently deceased. And the reason she got the policy was because the brother was sickly from a very young age. And I had just recently wrote a policy on the brother. He was on oxygen. He had a lot of health conditions. We were able to get him covered. They were concerned about the policy that this sister, who was the outcast, the black sheep, what she had on him. And what I advised them of was, I can help you and direct you to learn and discover if there's any other policies on him. But even if it is, it ain't nothing you could do about it. She paid for that. That's her money. She does not have to do anything in accordance with his death.
Yeah.
Y'all want to say what she should do with it, but nobody never helped her pay for it.
Yeah.
So that's the thing about life insurance. The life insurance companies don't get to dictate, navigate, negotiate, or allocate what you do with the money when you cash the check. That's your bread. You bought the money. If she want to go buy a car, if she want to go get real estate, whatever she want to do, that's her money to do with it.
Yeah.
So another thing I've seen in certain cultures where the children have come together and got a large policy on their parents. And each sibling took care of it per quarter or whatever the case may be. If you miss, you out. Right? But, yeah, if you miss, you out. It's round robin. And I'm talking about exuberant amounts of money. Because they know it's going to happen, right? And the parents are in on it, right? There's certain things to be designated to grandchildren or whatever the case may be. But you get to do what you want to do with your piece of the pie. You get to have your cake. You get to eat it too, right? Whether you're paying off bills, debts, their mortgage, keeping the family house, putting your children through private school. It's going to happen, right? So, listen.
That's just money right there.
Yeah.
It's just
I'm gonna
money.
censor myself. Huh?
It's just money. It's
It
just,
is.
man, I can't imagine being somebody who would miss that, and then when it's time for the payout. Woo.
Yeah, people get funny and it's a high emotional time. Um, I have a client. Two things that come to mind. I had a client. I was on the phone with her, and she had a daughter. It was the only child she had, and they were like best friends. And the daughter had children. And I got her a policy, and we built a great rapport and talked on the phone. I understood her needs, and I helped her. We got off the phone. She called me right back. I said, "What's up? What's going on?" I mean, we had literally just hung up. What's going on? She said, "Girl, give me another 20,000." I said, "Okay, well, why do you say that?" She said, "I know that child of mine." She said, "She a fool," and she said, "If they give her 3 days of bereavement and try to tell her to go back to work, I don't want her having to go to jail. I'm worried about my grandkids. I need her to take as much time as she needs, right? Because the bill's not gonna stop, right? But your employer is gonna tell you, take 2 or 3 days and get over it." Be back at work and put a smile on your face. Clock in and do your job.
Again, you buying money, and that money will buy you options.
It will.
How much money you want to buy?
How many options do you want to provide your family with? How many options?
That, you know what? We're gonna end it on that.
We out.
It don't get any better than that. How much money you want to buy? How many options you want to provide for your family? If you want to know more, or you got some comments, drop comments down below if you enjoy the conversation. And then if you want to know more, you want to buy some options for your family, you can get with me, you can get with Fancy, whatever. You will be.
If you have questions, you want anything reviewed, if you're unclear about things you've seen on social media, whatever the case may be, we're here to be a resource to hopefully ignite people with the information that we provide. But of course, people have questions, so that's what we're here for, to have a cure for your inquiries.
Okay. All right. And with that being said, y'all have a great day. And
thank you, T. Thank you, Commissioner.
You're absolutely welcome.
Bye.